Welcome, everyone. We're gonna try and analyze some of the implications of what's going on due to the coronavirus today, and its effect on macroeconomic events. Something happened this week that I don't think anybody could predict, that the front month, which in crude oil, we used to, 2 months ago, we were producing about consuming 100 million barrels a day. 100 million barrels a day. That's a tenth of a billion barrels a day. Yeah. So with the business world basically on lockdown, now they're saying that number is about 65 million barrels a day. And if everybody's producing the same amount of oil, there's an excess of 35 billion a day. So anyway, what happened? So as we were rolling out of the May month, the price kept dropping and dropping and dropping. And I remember calling up my buddy on Tuesday and saying, you can buy the May oil, but you really couldn't, because if you bought May oil, you'd have to take delivery for 10 cents. Well, within a very short period of time after that, it was trading for minus $35 a barrel, which meant anybody who owned May oil had to sell it. And the only price that was there was a negative price. So they had to actually pay someone to take their oil off them. Now, I don't know how this all happens. I can assure you that most people were caught off guard by this. And now a lot of questions are raised. Is this going to happen again when the June contract comes off? Anyway, the June contract got down to $5. The June contract is now, I think, around $17. So if you were a gambler, you could have bought June oil on Tuesday, $5, $6, $7, $8, and you sold it and doubled your money. Well, you would have more than double your money, because when you buy futures, you only put up a fraction of the money. So that's the kind of insanity that we're living with here. The markets have bounced dramatically. All 11 S&P sectors were higher today. Google came out yesterday and said they're going to cut their advertising budget in half. All these different, points out there that are happening. What does it all mean? It means the world's gotten a lot smaller. Rick Santelli came up with a chart, I think 2 days ago, and said that in the last 26 years, this is the lowest of basket of commodities. So it looks like deflation is setting in. And by the way, if you look at the stock market, the S&P, if you look back, I think it bottomed at late March. So we're about a month now of rally. But the last 2 weeks, the market really hasn't gone anywhere. It's sort of rallied for 2 weeks, sort of hit a level, and now we've been sort of backing and filling. I kind of think we're rolling over. Interest rates are very low. No one seems to care. They're talking about the 10-year rate. It's now 0.6, 60 basis points. If that can't get moving, that means that nothing's moving. Boeing is like, what, $10, $15 from the low it hit? You just got to look around. Now, Amazon's close to a record high. Netflix hit a record high. Zoom's doing really well. Everything that's related to staying home, And yesterday, Gilead, there was a rumor out that their trials in China have flopped. So the stock got hammered. Now it's come back today. That's what's going on. All these companies, they have good news, they go up. They have bad news, they drop for a while, then they go up again. Here we go. 30-day chart of the S&P 500, and just a couple points. There's your all-time high back in February. And this is when, Apple started talking about, we got some issues in China with the virus. So look at this. This is the drop. So that took about a month, I believe. Yeah, about a month. And so, we dropped 30%, I believe, from about 3,300 down to 2,100. But look at this. So a month later, we're half. In other words, we're not going up. If they're talking about a V, you'd see something like that, right? We don't have that. What we're having is we're having a big dead cat bounce, but yet we're about halfway, right? So there's the bottom, there's the top, there's the bottom, and that's where we are. The point I'm trying to make here is, even though it's been bullish, in the last 2 weeks, we really haven't gone anywhere. What I'm saying is there seems to be a wall of resistance in here. And now if we break out of that pattern, yeah, all bets are off. So now we have a 1-year chart of gold, and mistake I've made over my career is thinking that gold will always go up, but that doesn't happen. Nothing goes one way. There's cycles to everything. So 1-year chart, that's where we were a year ago, or almost a year ago, and here's where we are now. We're right at the highs of the last 6-7 years. But I want to focus on this chart. This is when the coronavirus first hit, but came right back and went to newer highs, or higher highs, I should say, not newer highs. Gold does its job when things aren't normal. You can't look at the information that's being released right now and put it into some kind of logical way of looking at it, because nothing makes sense right now. Nothing makes sense. Now we know why these companies are the favorite companies, because we just had a pandemic that shut everybody out, and no problem with Amazon, no problem with although Google has said they're going to cut back. Netflix, their subscribership's gone through the roof. Facebook's going to come out. Yeah, I mean, look, maybe everybody's saying these are the companies that are invincible. Maybe they're not going to be so invincible when they came out with the results, because everybody has to be impacted to some degree. Well, I shouldn't say it. I'll say 95% of the companies have to be impacted. Yeah, I probably wouldn't, but that doesn't mean I'm right, because there's a lot of crazy stuff going on. A lot of crazy stuff. People are jumping in, people are jumping out. Why wouldn't I buy them? Well, because I think it's already reflected. I like gold. I like gold, and gold is acting well. Thanks for watching, everyone. If you got some interesting questions, send them in. We'll see you soon. Be safe.